worried that Congress will change and will overturn these pro-growth policies. I really believe that. I think that the so-called correction, and I've said before, as you know, these things come and go, that correction has to overcome the uncertainty about this election. And I think businesses, large, medium, and small, do not want the tax cuts overturned.
All right, Larry Kudlow says blame it on the fears the market has about Democrats doing well in the midterms. That would come to news to a lot of these Fortune 500 companies, S&P 500 companies that have reported warning that they're feeling the pressure of trade deals and the like, and tariffs and higher costs associated with them. Caterpillar among those, 3M among those. So there are a lot of factors at play. To say it's just a midterm concern might be a little bit creative. I don't know if that's quite accurate. Anyway, the National Taxpayers Union senior fellow Mattie Duppler on all of this. Mattie, it's very, very clear in the case of some of these companies that have been sending out warnings and concerns. It's not so much politics or the midterms, but everything having to do with trade and higher costs now. Now, it might work out for them if we get this trade impasse settled, but for the time being, it's eating into their numbers.
Yeah, you know, it's been an interesting story for businesses for this entire year because, right, they've got the economic reforms that come in the form of tax reform as well as the regulatory changes that have happened in Washington, D.C. thanks to the Trump administration. But all of that is happening against the backdrop of higher tariffs and potentially an escalation in these trade tensions. And so businesses have to try to assess what the risk is headed into the new year. Now, I will say in this quarter, we actually have more of a firm deadline, if you will, looking at what's happening with trade than we have had in the past. And that's because the last tranche of tariffs that the administration put into place are scheduled to go higher on January 1. We know for a fact that the 10% tariff placed on $200 billion worth of Chinese goods will escalate up to 25% on the 1st of January of next year. So businesses now are having to look into the future to say, listen, we're not sure what's going to happen politically, but we certainly know economically what we might be up against. You know,
Paul Volcker of the New York Times, a former Federal Reserve chairman, said we're in a hell of a mess, referring to the foreign environment and its tipping point. Now, of course, he's not a fan of this president. He's not a fan of his approach. He's not a fan of how he works with, fellow leaders around the globe. So accept that with a grain of salt. But he is talking about global unrest that we ignore at our peril. Do you agree with him?
Well, I think that there are a lot of ways to characterize volatility in this economy. You look at the United States and you look at the growth in the United States economy. It's very strong, stronger than it's been probably in the better part of a decade. So that certainly is something that, if there is global instability, should quell some of that, because the United States is, of course, the international leader when it comes to the economy. So when the United States is doing well, the rest of the world benefits from that. Now, looking at the way that we interact with the rest of the world, that certainly is a question. You know, you look at what's happening in the next 2 weeks. Iran sanctions are supposed to come back into effect. And of course, the United States had a plan of dealing with that, with Saudi Arabia playing a role in being a stabilizing force in the region. We're not quite sure we can count on them anymore. So really what it comes back to is we need an administration that is nimble and able to assess the threat when we're moving into a new set of circumstances. I think that what's happening in the Middle East as the Iran sanctions are coming even nearer certainly brings to light the notion that we need to have a plan in place regardless of what the other state actors are going to do, because we can really only control what our policies are here to counteract them.
It does continue, whether you support or not the president's policies, that if something goes wrong, they're certainly not going to point the finger at themselves. They're going to point on the, and that's human nature. I understand that. But again, we're reminded that they see no short-term risk, at least to the very clear impact that their trade policies are having with China. And again, to the point we mentioned earlier, it might work out, but that is a clear impact that's on them. They might reverse that by scoring a deal with China,
right,
but it's on them.
Well, humans and companies are impatient beings, and that's one of the problems that we have right now. As United States companies continue to try to realign their business practices with the new normal of really tight employment, nice economic growth, business and consumer confidence growing, that takes a little bit of an adjustment period. And unfortunately, that's all happening against the backdrop of these trade uncertainties that really make it difficult for businesses to plan accordingly heading into the future. If we had trade figured out, businesses would be able to plan a little bit better, and there wouldn't be this hesitation, especially that what you see in these earnings calls that fuel so much of our speculation when it comes to markets. We wouldn't see that. So we need the administration to offer a little more certainty on that realm.
All right, Mattie, thank you very, very much.
Thanks, Neil.
Mattie Duppler. Again, there are, to Mattie's point, there are a lot of catalysts going on here, including the run-up very, very fast in earnings and the like that obviously has to run back down. A lot of concern about the trade war and the higher costs associated with that. But nowhere on the long, long list of factors and worries for this market is this notion that Larry Kudlow advanced today that the markets are concerned it's all going to go kablooey with the Democrats. That's still a factor for what seems to be a consensus building that the Democrats take the House, Republicans hang on to the Senate. That's been out there a long time. It could be wrong, but Larry Kudlow's wrong on that. He's just wrong. It's a misstatement or a lie or both. More to this.